Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss Ellie Q been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to Ellie Q.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LQ is cheering them up in their day, but I know that it's only a part of the way. No source of artificial intelligence, robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. and that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's a reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the, like, profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
We are wheels up for the Wednesday edition. I'm Doug Krisner in New York, along with Jess Menton from Bloomberg News at the Bloomberg Interactive Broker Studio in New York. This is Bloomberg Business Week. Carol Masser, Tim Stenovec, both off today. Jess, it's great to see you.
It's great to be here. It's always fun doing this, so I expect the next 3 hours to be the best 3 hours in business radio.
Yeah,
Doug.
and we've got a lot to talk about. There's a lot of risk appetite going on in markets today, a lot of uncertainty about what the Fed may do.
Right.
We've got some critical data coming at the end of the week, that PCE.
Inflation.
Very much front and center for the Fed, I think, as
Yeah.
they try to chart the path, not only of whether or not we get a couple of more rate hikes, but will the Fed be in a position to cut rates before too long?
And this is the Fed's preferred gauge for inflation, right? So it doesn't have quite as big of a housing component than, say, when we're talking about CPI, which tends to sway, at least last year, markets more so than others. But this year, CPI, not quite as much of a dramatic shift. But when you're looking at under the hood for the S&P 500 today, technology, growth stocks leading the way, but also real estate, and you do see utilities up there. So it kind of tells me the search for income might still be there.
And the other thing, too, and I know you're going to unpack the Micron technology story in a little bit. That was surprising. I'm surprised to see the stock trade up as much as it is right now. The margin story, I thought, was very revealing. They're not out of the woods yet.
Right. When you and I were discussing this after the bell yesterday, looking at the inventories, so the load that they have, I guess this is a story of still didn't come in as worse as feared, but that's still a problem and an issue on their balance sheets. But if you're looking at that stock, still being a bit rewarded, even though it has been especially under pressure last year, Doug.
Yeah, the other thing that we're looking at, too, today is a lot of weakness in the Japanese yen, and we're going to take a closer look at that momentarily. A lot of cross currents in the currency market today, and the yen is down about 1.3% right now at 132.64. But a lot of positivity for the equity market, as I mentioned, with the S&P higher today by around 1.3%. We'll be talking more about market action and get to some of the business stories of the day here on Bloomberg Business Week.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We've got 60 minutes left in the trading session. I'm Scarlett Fu here with Katie Greifeld, and we're joined right now by our colleagues in radio, Jess Menton and Doug Krisner. And of course, we also welcome our full Bloomberg audiences across our different platforms, TV, radio, YouTube, and originals. And Jess, I'm looking at the S&P 500, the Dow, the NASDAQ, the Russell 2000. We're at session highs. Banking crisis over.
Right? That's the question there. And so if you're looking at what's leading today, information technology, real estate, interesting dynamic there because tech and growth, but then you're still seeing a bit of that search for income, right? When you're looking at what's happening with real estate and utilities being up.
So the other thing that I'm looking at today, guys, a lot of weakness in the Japanese yen where the dollar is concerned. We've had a couple of things to unpack here. One, the new deputy governor of the BOJ saying that there is the possibility when the time comes for a policy adjustment from the Bank of Japan that it will do so in a surprise. Also, with the appetite for risk that we're seeing, a bit of an unwind of that haven trade. And March 31st ends the fiscal year in Japan, so a lot of corporate treasurers unwinding those yen hedges. Big move today in the end, though.
Yeah, I'm so glad you mentioned the end of the Japanese fiscal year because in recent days, the yen repatriation trade was a theme that people were definitely pointing to. And there can be a lot of interesting moves in the lead up to that. So right now, you look at the major indexes and pretty much all green. In fact, it's a broad-based advance with more than 3 stocks higher for everyone that is down on the New York Stock Exchange.
And if you look at the sector level, I am pleased to report we have 11 out of 11 sectors in the green right now, like Jess was talking about. You have tech sort of in charge right now, up almost 2% or so. Then real estate and consumer discretionary. You look at the relative underperformer, it's healthcare, pretty much unchanged on the day, but still, that counts as green.
That counts as green. And of course, you see banks up there as well. We do have some breaking news. The FDIC, the Federal Deposit Insurance Corporation, is considering squeezing the biggest banks as it plugs a $23 billion hole. Of course, the FDIC made whole the depositors of Silicon Valley Bank and Signature Bank, and that cost it certainly. And so now it's going to consider squeezing the biggest banks, meaning they would pay higher fees to the FDIC as a result of these, I don't want to call it a rescue, but as a result of these decisions. Again, the Federal Deposit Insurance Corporation faces almost $23 billion in costs from recent bank failures. So this is one of the proposals. We don't know if this is the final decision just yet. Now, I mentioned banks. Let's take a look at one of the banks that has been in the spotlight, and that's First Republic. It's actually helping to lead the KBW Bank Index higher today. Remember, this is a stock that began March at $122, and it's now at $14. Micron is the biggest gainer in the S&P 500 after its quarterly forecast topped estimates. The hope here is that the worst of the industry slump is over. Customers have used up all their excess inventory. We saw Intel moving higher, as well as the entire Philadelphia Semiconductor Index. Lululemon getting a big boost, up by almost 13%. The full year outlook topped estimates. It sees sales growing 15%, so a lot of expensive leggings that it sees being sold in the days to come. And Jefferies, I include this one because it's a good early peek at what we might get from the Wall Street banks when they report their earnings next month. And what we found from Jefferies was that they had a 33% gain in sales and trading revenue, but a 42% drop in investment banking revenue. So that's going to be a theme that we're going to get once again later on. But big picture, of course, it all comes back to banks and what it means for earnings and what it means for the S&P 500. So when you want to quantify the banking turmoil's effect, it seems like strategists are kind of confused. They're not really doing anything in terms of their average year-end target because it stayed static at 4,050 for a third straight month. Lu Wang wrote about this in a Bloomberg News story, and the gap between the highest and lowest S&P 500 targets is really big. It's 47%, which is the widest gap at this time of the year in 2 decades. But just maybe it's working out because the S&P 500 has pretty much erased almost all of its losses since March 8th before regional banks began their plunge.
Right, and especially when we're talking about banks, right? What else we've been watching today? More on the developments on the UBS Credit Suisse front. So UBS has moved to bring back Sergio Ermotti as CEO, and shareholders are really hoping that will ensure a smooth transition as the bank's recent takeover of its rivals. So UBS Chairman Colm Kelleher, he actually was speaking at a press conference, and that it was the board's responsibility to appoint executive leadership that regulators had approved when it came to Ermotti. And so here's what else he had to say.
This is the biggest single financial transaction since 2008, and I would argue it's bigger than any deal that was done in 2008 because it's the first time 2 G-SIFIs have merged. That brings with it significant execution risk. We felt on that basis that whilst Ralph was capable of doing the job, we felt that Sergio was better suited to navigating these things, mainly because he already has downsized an investment bank of scale and has experience of that, which we have to do quickly.
And this is interesting, too, because if you remember, Kelleher actually had previously helped navigate Morgan Stanley through the financial crisis. So it's an interesting dynamic when you're seeing these 2 powerhouses. Obviously, Credit Suisse still having those problems since the global financial in 2008, but this marriage of these 2 investment giants trying to make it work and what that could mean moving forward.
And I mean, he did not mince words when it comes to laying out the gravity of the situation, the seriousness of this task, trying to knit together these 2 big banks. And it makes sense, given that backdrop, that you would want a veteran such as Sergio Ermotti back in the saddle, given that he led UBS for 9 years. He knows the job.
He knows the job. Well, I want to bring in Hannah Levitt right now, who's been writing the story on the FDIC considering squeezing big banks to plug its $23 billion hole. Hannah, can you give us a little more detail about what the FDIC is considering specifically here?
Yeah, totally. So thank you for having me. The FDIC has a fund called the Deposit Insurance Fund, and the purpose of that fund is to insure the deposits such that in the event of bank failures like the ones that we've seen in recent weeks, they'll be able to make those depositors whole. So the FDIC, in the wake of Silicon Valley's failure and Signature Bank's failure, has said that they're expecting a hit to that fund to the tune of something like $22.5 billion. And so they're going to do a special assessment to the banks, which I'll pay for this insurance, like anyone pays for any kind of insurance, to shore that fund back up. And what we just reported is that they're considering making the biggest banks pay a larger than usual share of that special assessment.
And Hannah, how exactly are investors taking this news so far?
Well, it looks like I'm just looking at the headlines as they cross, but it looks like some of the bank stocks went a little down, I'm thinking. I mean,
you're
it's
right.
purely...
They're still up, but they've pared some of their losses. They've pared some of their gains. So you're absolutely right, Hannah.
Yeah, exactly. And so, I mean, ultimately, what happens here is that it eats into earnings. So it's pretty straightforward. If the FDIC is doing a special assessment, they say, you know, hey, JP Morgan and Bank of America and Wells Fargo and all the other firms, you know, you have to each pay based on this formula to shore up this fund. But there's been a ton of political blowback on behalf of the smallest banks, the community lenders, about having to essentially pay to bail out Silicon Valley Bank depositors and Signature Bank depositors. And so we've seen a lot of chatter about this. In D.C., there have been a couple hearings over the past few days where this has been a big topic among lawmakers.
Well, thanks to Hannah Levitt of Bloomberg News. So that does it for us right now. We'll be back again live on TV, radio, and YouTube at 4 p.m. on our Beyond the Bell coverage when we take you through today's market close. And a reminder that Bloomberg Business Week is now on Bloomberg Originals.
A breakdown of the banking system, a breakdown in confidence, and a breakdown, I guess, in the resolve of the FDIC not to pass on some of the cost of insuring these banks' deposits right to the banks. Let's take a closer look at this now with Bloomberg's Hannah Levitt, who joins us for her story on the Federal Reserve System. Oversight failures ahead of the collapse of Silicon Valley Bank. And apparently it wasn't confined to just SVB, Hannah. This, as you indicate, kind of runs coast to coast, is it not?
Yeah, so the drama, the finger pointing is running coast to coast right now, certainly. So you have the Fed in D.C., the Board of Governors, which Vice Chair of Supervision Michael Barr has pledged to do a review of the failure of Silicon Valley Bank. And then you have, you know, nearly 3,000 miles away, you have the Federal Reserve of San Francisco, the branch there that was in charge of the day-to-day oversight of Silicon Valley Bank.
And Hannah, it was great having you back after just speaking with you as well. As far as when it comes to that particular threshold for the FDIC at $250,000, that cap there when it came to those uninsured deposits, any indication as far as what potential changes could be coming? Because I know there were some hints yesterday that we could be hearing a little bit of that potentially maybe in May. Wanted to see what else was happening with that on the latest updates.
Yeah, I mean, it's a very moving target. All of this is very much up for discussion right now in the corridors of Washington and whatnot. But yeah, ultimately, to the extent, like they made the systemic risk exception. They chose to make all of the depositors whole for those two banks that failed, rather than just the insured depositors, which is the deposits up to $250,000. And so now that's creating a bill that's almost $23 billion.
So we just had the breaking news about the FDIC and how it intends to plug the whole $23 billion, I think is the figure we're putting on it. I'm wondering whether or not the FDIC is still going to be in a position to have to go to the Treasury, borrow more money from Treasury at a time when Janet Yellen is already juggling. We've got this debt ceiling issue that still has not been solved. Is there the risk that the FDIC has to ask Treasury for more money?
So I would think of this as separate issues. So the FDIC will be making these depositors whole through what's called the Deposit Insurance Fund. And that is a fund that is, at the end of the year, it was $128 billion. And it's, you know, all the banks pay on a quarterly basis. It's like paying for an insurance policy. It's like how anyone pays for an insurance policy. So they pay into that, and then the fund exists. And then in the event of a bank failure, that fund makes these, you know, it insures the deposits. It makes the depositors whole. So that's really, you know, it's a bucket, and the money that goes in comes from the banks, and then it goes out to to insure these.
So we already know that. I mean, they're 23 billion in the hole on this. They have to fill it very quickly, particularly when you have the message coming from officials that they are attempting to, at least in the near term here, try to backstop all bank deposits.
Yeah, and so that's what FDIC Chair Marty Gruenberg has been talking about in D.C. for the past couple of days, is that there will be a proposal on the special assessment that'll replenish the insurance fund in May.
Something I was curious about, Hannah, because we've had these hearings this week on Capitol Hill. What is it like between, if we're talking about Republicans versus Democrats? Do they seem to be on board with some of these proposals, or is there any sort of divisiveness about certain aspects of them?
I mean, that's a great question, and the hearings today were very interesting in that regard. It sometimes seems like with each person there's a slightly different take on things. But the criticism, there's a lot of criticism to go around right now, whether it be, not doing enough to bail out depositors and to doing too much to bail out depositors and all this, anything in between. And that's just, one dimension of it. And then talking about the other story that we had out earlier on the kind of blame game within the Federal Reserve itself, there's a lot of finger pointing going on right now.
It's, I would imagine, so difficult for any risk manager in an environment where you've got Fed funds moving up by 450 basis points over 12 months. I mean, this has been a very, very difficult environment in which to manage risk. Is there any acknowledgement maybe on the part of the Fed that they should have put more sensors on the system at a time when they knew that they had to be super aggressive?
Yeah, well, that's an interesting question, and one that I expect will be addressed, at least in part, by this report that Vice Chair Barr has promised by May 1st. And, I would think of it as monetary policy being different from supervision, but it is all the Fed.
You're
right.
right.
I think those are the kinds of outstanding questions that we should be looking to have answered, over the next few weeks.
And so what are the next, I guess, near-term things that you're keeping an eye on how this all develops?
It really changes by day, I think.
Right.
But, yeah, everything from the fallout on the bank side, the fallout on the regulatory side. And, to my first point on the bank side, earnings are coming up. They start in 2 weeks. So that'll be a really interesting window into, how all the banks, large and small, have fared through the first quarter, which has really been a tumultuous period for them. And then beyond that, the kind of DC fallout, whether it be among politicians, among regulators, things like the reviews that the various agencies are doing and things like that.
So, Hannah, do you think it's safe to say that at this point, based on what we heard coming out of the Senate hearing yesterday, that this $100 billion level in terms of assets, that there will be stress test applied to banks that kind of begin at that level?
I think that's an open question and a very good question and something that we should all be paying attention to.
And especially when you think about those mid-sized banks, right, Doug, as far as certain thresholds where a lot of those issues were not caught. And so now kind of moving forward, what that could mean for those stress tests, obviously not just big banks, but regional banks as well. But Hannah, I was curious as far as just kind of when you're speaking with experts, what they think potentially the Fed should do in these stress tests to measure some of these more regional banks more scrutinized as far as how this moves forward.
Yeah, well, it's a very, it can be kind of a moving target, right? So if you recall, Silicon Valley Bank a few years ago was less than $100 billion in assets. It grew exponentially in size over the past few years to the point where it was up, above $200 billion at the time it failed, I believe. And so that massive growth and just the kind of scrutiny that's applied to, a bank at each of those levels and how to grapple with one as it is soaring through those levels is something that was a very thoroughly discussed topic at those hearings.
Is there any concern being expressed as we work our way through this process in the case of Silicon Valley going out of business? There's questions around First Republic, there's Signature Bank, about the consolidation that has taken place and whether or not that's a healthy thing?
Yeah, and you definitely have people on both sides of that argument as well, where you can point to, there being nearly 5,000 banks in this country, and, you think about how much someone like JP Morgan can spend on, you know, tech investments and staying ahead versus like how much JP Morgan spends a year on that versus like the actual just size of some of the smaller banks. And it's really quite striking. So that's, and you know, the environment for bank M&A has definitely been a topic, and whether, you know, there should be more of that, there should be less of that.
There was one moment it felt like the subject of bank nationalization in the U.S. came up for conversation. I'm sure that got snuffed pretty quickly.
Yeah, doesn't it always?
We only have about 20 seconds left, Hannah, but I wanted to just get your thoughts on, I mean, how hectic has it been trying to cover this with, you have all sorts of different headlines changing week to week over the past couple of weeks?
Yeah, it's been super fun. It has been very hectic. I'm not entirely sure what day, week, month, year it is, but you know, I mean that in the best way possible. It's been a lot of fun.
Hannah, thank you so much. Always a pleasure. Hannah Levitt there from Bloomberg News, helping us understand the story around the residual impact of the meltdown of Silicon Valley Bank here on Bloomberg Business Week. We're looking at market positivity. We've got a lot more ahead on the Wednesday program. Stay close.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ advancing. In fact, we're at or near session highs. Stocks are gaining as a risk-on rally lifts banks and technology. We begin with the NASDAQ 100 index up now by 2%. NASDAQ Composite Index up 216, up by 1.85%. S&P higher by 56. That is a gain of 1.4%. And we have got the Dow Jones Industrial Average up 315 points now, up by just about 1%. Key takeaway, best level of the day right now on the S&P 500 index. 10-year yield 3.56% with the 2-year, 4.07%. Spot gold down $8 the ounce to $19.64, down by about 0.5%. West Texas Intermediate crude $72.90 a barrel, down by 0.4%. As for the overall market backdrop, Lisa Erickson is head of public markets due diligence at U.S. Bank Wealth Management.
Certainly we're closer to either a Fed pause or a potential pivot. But that being said, there's just a lot of caution signals on the horizon. And chief among them really is the fact that we've got both growth slowing as well as inflation, while it's coming down, it's still at elevated levels.
After earnings, Micron Technology now up 8.5%. Lululemon Athletica after earnings up by 13%. Again, recapping, a rally underway with the S&P up 55, up 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you, Charlie. So I'm Jess Minton, Deputy Team Leader for the Equities Team, and I'm here again with Doug Krisner of Bloomberg News. So I'm looking forward to looking more under the hood, Doug, when we're talking about Lululemon, which did report earnings after the bell.
How would you categorize this company? I mean, is it upper end athleisure?
Yes, it's definitely upper end athleisure, and so it did report earnings yesterday that came in a lot better than expected. So it does kind of make you wonder, what does that say about the trajectory of the economy, right? When people potentially are still spending upwards of over $100 on some of this athletic wear.
Let's take a closer look. We have Bloomberg Intelligence Senior Analyst Poonam Goyal. She's in Las Vegas. And Zachary Waring is with us. He's an analyst at CFRA Research, joining from Williamsburg, Virginia. Poonam, let me start with you. Unpack the numbers that we had yesterday after the bell from Lulu. How would you characterize them?
Overall, very, very strong, especially on top line. You know, their sales came in ahead of their own estimate and consensus, growing 30%. Gross margins were down, but still pretty encouraging. And the inventory is high at 50% year over year, but still, you know, they're bringing that number down. Really, I think what was key here was the guidance. The guidance came in well ahead of expectations, 15% growth for the year and 18% for the first quarter versus consensus in the low to mid-teens. So I think, you know, the key takeaway here is that Lululemon did well in the fourth quarter, but it's just not the fourth quarter. They're expected to continue to do well in the coming year, where the macroeconomic environment is a little bit uncertain, right? We don't know when and where consumers will pull back, but it doesn't seem like it'll be on athleisure anytime soon.
And Zach, I want to bring you into this conversation because as far as looking ahead and its outlook, what are you seeing there? And where are the promising signs and where there's still some weakness as far as when it comes to this athleisure maker?
Yeah, thanks for having me, Jess. So, you know, we really like Lululemon. You know, we think it's a great company, really strong brand. We do have an issue with inventory still. It's still a little bit elevated. So over the past 3 years, you know, inventory is up 41% annually, which is much higher than the sales, up 27% over the same period. So we'd like to see that down below $1.3 billion by the end of the year. If they can get it down to $1.3 billion by the end of the year, we think that's pretty much in line with where it should be.
So, Zach, does that necessarily mean cost cutting?
No, so I think they'll have to have some promotional activity to get rid of it. I think part of it will be they'll order less, so they're doing that now. They did that in the last quarter. They ordered, you know, less than they normally do before the holidays, and then, you know, ordering less for spring, you know, because they have a large, they say almost 50% of their inventory is core inventory that they can sell year round. So, you know, they've got a little bit of work to do on inventory. Outside of that, though, obviously the brand and, you know, revenue growth is unmatched in apparel retail. So, we do like shares. It's just tough to get really bullish with inventory levels this high.
Yeah.
And Poonam, I wanted to bring you back in because looking at Lululemon stock this year, up 13%, but when you draw it out over the past year, kind of hasn't gone too far. But I mean, who do you consider to be more of a competitor when it comes to Lululemon? And I mean, how are some of its competitors holding up compared to how it has?
Sure. So, one competitor that comes into mind is Nike, right? Nike clearly is also making a big push into, I think, more stylish, right? Because they both sell activewear, but where Lululemon kind of wins is on the styles and the comfort and the fit. So we've seen Nike make a bigger push, especially with women. Lululemon does have a men's business that is planning to double, but it's on the women's side where it really resonates really well. And Nike has been pushing up its women's business as well. So I think both equally focused on driving sales of athleisure, with Nike making a big push on women and Lululemon making a big push on men.
So, Zach, to what extent is there risk in the companies like Lulu getting it wrong when they look at the outlook, that the macro could turn south so quickly and impact all categories of retail that the market may not fully appreciate at this point?
Yeah, so, looking at some of the other apparel retailers in their, fourth quarter and their guidance for 2023, it comes in a lot lower. But that's to be expected. So Lulu's been growing, at 25+% now for the last 3 years, like I mentioned earlier. So
would you say that's a pretty mature market, though, for them? I mean, at that growth rate sustained over time, at some point you hit a wall.
Yeah, well, so they're expanding into China. So they had 30% revenue growth in China this quarter, 50% on a 3-year annual basis. So China growth is strong, and that's kind of where they're looking to get a lot of their high growth is internationally, but China specific. Management talked about that on the call a lot. And we think that's possible. It's obviously got its risk in China, obviously with the government and how they handle the U.S. businesses, but we think it's doable for them. They guided for 15% revenue growth in 2023, which was in line with what we expected. We think maybe not quite 25% annually for the next few years, but 15% sounds pretty much in line.
Hey, Poonam, I want to get your thoughts as far as when we were just talking about this, Doug and I, as far as the tell this could mean for the economy. When you see Lululemon's performance versus when you're thinking about, say, completely different retailers, right? When you're looking at the Walmarts of the world, Macy's, Targets, what does Lululemon's performance say as far as what it could mean for the trajectory of the economy?
I think it comes back to product. Product is king. When you have the right product, you will sell it. When you resonate with your customer, the customer will keep coming back to you. Those are the brands that are winning today in retail, and Lululemon is clearly making inroads with its customers. Also, it's still a small company when you compare it to someone like Nike. Lululemon is expected to grow to $12 billion by 2026 in top line. Nike, almost 4 times that size, right? So when you talk about runway, is there a runway for Lululemon to expand? Absolutely. And the real runway is internationally, as you just heard about China, and also digitally. I think those are 2 big opportunities for Lululemon to keep plowing through and driving really outside growth.
Zach, we were talking earlier about inventory levels being slightly bloated, the need to kind of cut prices to move that product out. In terms of cost cuts on the manufacturing side, is this something that the company needs to address? I don't know to what extent they're exposed to manufacturing in China. Maybe they're more diversified. Maybe they're in Vietnam right now or even India. Is this something that you think has to be top of mind for company management, getting a more diversified supply chain in place?
Yeah, so Lululemon's got a pretty diversified, logistics system in place. We think that, they're out of Canada, obviously. They've got manufacturing all over the place, but they're high end, so they're not too worried about that part of the business. Management's talked a little bit about they don't have a lot of promotional activity, so they're probably going to just order less, is my guess, over the next few quarters until that inventory comes down. But the CEO talked about it in this quarter that inventory wasn't an issue, so he doesn't see it as an issue, even though we think it's probably still a little bloated. They do grow into their inventory usually, but it's still, even for Lululemon, elevated.
And Poonam, we only have about a minute left, but I want to get your thoughts going back to what I was saying as far as the trajectory of the economy. I mean, can we have a potential recession when consumers are still spending on discretionary items like Lululemon?
No, I think if we actually go into a meaningful pullback in consumer spending, the discretionary sector will too be impacted. Prior recessions have showed us that there will be a material pullback. The question is, when does that pullback come, and what's really going to drive it? Because currently, inflation, a falling savings rate, a slight pickup in unemployment, debt levels rising, it hasn't done it. So are we going to enter into a deep recession? Then in that case, I would expect discretionary spend to pull back even across athleisure.
Hey, Zach, very quickly, stocks trading around 362 and change. Do you have a price target here?
I do. So my price target is 425. That's a 12-month price target.
Wow.
So there's some upside to my
I'd say.
price target, but we have it as a hold currently.
Okay.
And strictly from an inventory standpoint, we're a little bit worried about maybe some margin compression in the next few quarters.
Good talking to you, Zach. Thanks for joining us. Zach Waring there is an analyst at CFRA Research from Williamsburg, Virginia, and Poonam Goyal, Bloomberg Intelligence Senior Analyst for retail, joining from Las Vegas. Right now, shares in Lulu better by more than 13%. This is Bloomberg Business Week. Good time to check in on the latest in world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nancy.
Thanks, Doug. The former head of Starbucks has been defending the company's labor practices. Howard Schultz testified today before the Senate Health, Education, Labor, and Pensions Committee. Vermont Senator Bernie Sanders started the hearing off by accusing Schultz of breaking the law more than 100 times to prevent unionization efforts at stores nationwide. Schultz would have none of that.
Starbucks Coffee Company unequivocally, and let me set the tone for this very early on, has not broken the law.
Schultz says he's confident allegations of union busting will be proven false. The Senate has voted to repeal authorizations for use of military force for the Iraq and Persian Gulf Wars. The White House says it will back the measures. The bills passed on a 66-30 vote with strong bipartisan support. Supporters say the repeal was needed to prevent abuse by presidential administrations that could use the old authorizations for use of military force or to launch unrelated combat operations without obtaining congressional approval on where and when to send troops. The New York State grand jury hearing evidence about Donald Trump's role in a hush money payment to an adult film star is getting some time off. We get details on that from Bloomberg's Jill Snyder.
Bloomberg has learned jurors have been given 3 weeks off and are expected to reconvene on April 24th. DA Alvin Bragg convened the panel in January to investigate whether Trump directed his former lawyer and fixer, Michael Cohen, to make the payments to Stormy Daniels, who says she had an affair with Trump. Cohen says he paid Daniels $130,000 for her silence and was reimbursed by Trump. The former president denies the affair and any wrongdoing and says the probe is a political vendetta. Jill Schneider, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ off session highs, but still holding very close. We got a risk-on rally that's lifting banks and tech. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid today, with the Dow currently up 270 points. S&P's gained 52, and NASDAQ is higher by 1.8%. The U.S. 10-year yield at 3.56%. Gold is down 9, energy trading in the red, and Bitcoin is higher by 3.9%. Of the main 11 S&P sectors, all were trading in the green, led by gains in tech, real estate, and consumer discretionary. And leaders to the upside, the Dow, Intel, American Express, and Salesforce, while UNH fell 1.4% and led to the downside. In other news, the FDIC mulls squeezing the big banks to plug a $23 billion hole. And in the chip space, Intel rose as much as 9%. Wrapping things up, RH reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yeah, we have about 18 minutes until the closing bell, the Wednesday session. Fair amount of appetite for risk, and we're going to take some of these numbers apart with our guest, Bill Smead. He is the Chief Investment Officer at Smead Capital Management. He joins from Scottsdale, Arizona. Bill, it's always a pleasure. Do you buy into this rally today or not?
Well, we own the oil and gas area, and those stocks have had a pretty good week this week. But no, I would say that I find it illogical that the companies who are the vendors to the startups and the private equity people that are most damaged by these the bankruptcies in the bank world are tied very closely to what vendors feed off of the venture capital and private equity world.
So, Bill, I'm guessing you're not buying the dip on these pullbacks that we're seeing in banks, whether regional banks in particular?
Well, no, the bank issue is a separate issue created by the Fed tightening, and we happen to think at some point in time the Fed will blink, and they will not want to go through the amount of economic difficulty it would take to kill the inflation that was created by the Treasury borrowing too much money and monetizing it.
So,
that's a separate subject. What really is more important to this bear market that started in late 21 is it's got to cure the sins of the prior financial euphoria episode, which Charlie Munger called the biggest he'd ever seen because of the totality of it.
But based on what I'm hearing you say, you don't expect that. You expect the Fed to capitulate and have to cut. Is that before the end of the year? And then if we're looking at rate cuts, is that a reason enough just to trade the market and to go long U.S. equities?
Well, not by index basis. We believe it's not. There's not very much upside in a bear market rally from here, because you had one heck of a great bear market rally. I mean, the things that went down the most have gone up the most, but they're up to way below where they started. So that's what bear market rallies do. They're trying to suck people into believing that you can get the old game going again. So what are they buying? They're buying FANG stocks. They're buying, they're buying very aggressive stocks. And looking for, imagining that we're somewhere close to the bottom of a bear market with some of the highest equity ownership of households in history, and just trying to put Humpty Dumpty back together again.
Yeah, if you're looking under the hood for the S&P 500 for this quarter, the Infotech Index up about 19% over the past 3 months. Also, communication services up about 17%. And then, of course, right after that, consumer discretionary up about 12% in that span. So, Doug, I know you were highlighting as far as when it comes to specific energy stocks, but what are your top picks right now on the energy side?
Bill, what do you like in energy?
Yeah, we of course, we're a very large owner of Oxy, and we love the fact that Warren Buffett is coming in at higher prices, way higher prices than us. We think he's on the right track. We like Conoco quite a bit. We like Ovintiv and Apache as well. Those stocks are being penalized by having a certain part of their revenue coming from natural gas. And unless something is missing, there's only $2 downside in natural gas because it trades at $2. So there's $2 of downside, and I think the high was $10. So somewhere in here, it's going to get cold somewhere, and the supply of natural gas that has flooded the market will fade. And it's one of the cleanest forms of energy. So it actually it kind of fits in with the environmental movement to use natural gas, and that's one of the things you make electricity out of in California.
So would you be tempted to play fixed income right now, particularly in the corporate space? You mentioned energy. I'm wondering whether or not the credit markets provide you some opportunity for energy names.
We're stock pickers only, and are not asset allocators other than deciding which stocks we want to own. But I will say this, if we do have a recession and long-term rates continue to stay low, the spread between the 10-year Treasury and the 30-year mortgage rate is completely out of whack right now. There's like nearly 300 basis points spread between the two. It would be much more normal for that spread to be 1.7%. And if that were the case, you'd have about a 5.35% mortgage right now. And we own Horton, Lennar, and NVR, 3 of the 5 largest home builders. There are 92 million millennials out there, and most of them would like to buy a house if they could get a mortgage below 6%, and we think we're headed there.
Well, if the economy is headed to a level where the Fed is forced to cut, then I'm wondering whether or not people are going to feel like buying a home.
No. You just made the classic mistake. You never feel like buying a home. You buy a home because it's a necessity. When there's 92 million millennials, and even though they're different in many ways than past generations, they are getting married in droves last year and this year, which means they want a house and so forth. So that's kind of an urban myth that 92 million people aren't going to provide a lot of demand, where it was 75 million boomers and 65 million Gen Xers. So even if things are different than they used to be, we have a huge lack of housing. That's the biggest economic need we have right now, is that and inexpensive carbon energy.
One of the things we've been talking about in terms of the impact of this meltdown in some of the regional banks is tighter lending standards. Is that not going to carry over onto the mortgage side as well? You're going to worry about financing of some of these homes?
No, because here's the great irony. We call this a rich session, RICH-CESSION. People below the top 20% of incomes don't own much in common stocks. So when that gets bashed, it doesn't change their life much. And wages at average and below average people are soaring. You name any restaurant or any business establishment you interact with that doesn't have a sign up, say hiring at the best wages you've ever seen at the entry level in your lifetime, and I'll put in with you.
All right. Final thought?
I was taking a look at the XHB, the ETF tracking home builders in the S&P 500. It's up about 10% this year. So it's interesting when he's talking about Lennar and some of these other names.
Yeah, it seems like that trade is in.
Yeah.
But, Bill, I would imagine you're going to remain long that trade for a while longer, right? Very quickly.
Yeah, that's a 5 to 10 year thing we're working on. And again, there's plenty of corrections along the way in what we do, as well as the other parts of the market. The difference is things we own are not coming out of a 10-year
we'll leave it there.
Market that end in a mania.
Bill Smead from Smead Capital here on Bloomberg Business Week. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple has set a June 5th date for the event where it plans to unveil a mixed reality headset, the first major new product since its smartwatch debuted 8 years ago. The company has scheduled its annual Worldwide Developers Conference, better known as WWDC, to kick off on that Monday and run through Friday, June 9th. The Dow, the S&P, NASDAQ all advancing. UBS shares up 4.6% right now. UBS Group is bringing back Sergio Ermotti as Chief Executive Officer to oversee the historic acquisition of Credit Suisse Group, tapping a Swiss insider with extensive restructuring experience to replace Ralph Hammers after just over 2 years. Allison Williams says one of his challenges will be pulling back on risk.
One of the charts we like to show is, if you look at overall trading and revenue for the global trading and investment banking business, UBS is at the lower end of variability on that scale, and Credit Suisse is at the high end. And so taking on those businesses and instilling culture, I think, is probably the most important task and the most difficult task.
And Allison Williams, of course, follows banks for Bloomberg Intelligence against, UBS up by 4.6%. Lululemon Athletica shares are having their biggest gains since March of 2020 after the company gave an annual outlook that beat analysts' expectations. Lulu up now by 13%. Those are the company stories we're following this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, this is Jess Minton filling in for Carol Masser, as well as Tim is on leave. I'm here with Doug Krisner of Bloomberg News. Counting you down, we only have about 5 minutes left to the closing bell, Doug. So looking at everything, still seeing that rally in tech and growth stocks today, obviously trying to snap those 3 straight sessions.
So you were telling me a moment ago, a couple of days of losses. You were telling me a moment ago that there was a story, most read story on the Bloomberg terminal that caught your eye. How difficult it is right now for anyone managing money to try to get their arms around what's been going on in markets. These changes have been so fast and so furious, right?
They have, especially when you look at, as you know, the WIRP function in the terminal for the world interest rate probability. How many times have we looked at that over the last 3 weeks and seen dramatic changes, right? To see as far as what does the trajectory look like? Will there be a pause potentially at that May meeting for the Fed? Will there be rate cuts in the second half of the year?
It seems like if you look at what the swaps market is saying right now, we get another 25 basis point. I think there's something greater than a 50% probability of that, 50% probability of that happening. And then the idea, though, I think of a rate cut happening between, let's say, in the fourth quarter of next year, that seems to be, or this year rather, that seems to be very much up for debate.
Exactly. I'm looking at that now. The peak terminal rate is supposed to be right around 4.9% at that May meeting. And then when you look out to, say, the July meeting, that's when you start potentially seeing these cuts into the second half of the year.
So where does that leave equity investors right now? Do you go long the equity market under the notion that the Fed is going to cut and that risk assets will benefit from more liquidity being put into the system? Is that the story?
It's a great question because Jillian Wolf over at Bloomberg Intelligence was crunching this data. And typically, if you look back in history, the S&P 500 benefits more from a pause, not necessarily rate cuts. So when you think of, say, early 2001, when the Fed had those emergency rate cuts, so equities didn't bottom on that. It happened more on a fundamental basis whenever earnings actually bottomed. So it would bode well more for U.S. equities if there was actually potentially a pause, is what she was arguing.
So very quickly, when you look at industry groups, anything stand out today?
Actually, in addition to technology and the growth we were talking about, real estate still is something we touched on around the 3 o'clock hour as far as that search for income when it comes to REITs as well as utilities. Those sectors also more than 1% higher today, Doug.
We're making our way to the closing bell. Looks like we'll close near session highs. Bloomberg's Beyond the Bell starts right now.
Gotta wait. And decides anything on interest rates. So it's going to be a long wait. Let's count you down to the closing bell. Stay right here on Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Okay, 2 minutes to go from the end of the trading day before the closing bell rings. I'm Scarlett Fu here with Katie Greifeld. We are counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast, Jess Menton and Doug Krisner in our radio studio, bringing together Bloomberg Television, Bloomberg Radio, and our YouTube audiences worldwide as we try to track the most crucial moments of the trading day. And Jess, I thought it was interesting when the headline crossed that the FDIC might start charging the big banks higher fees or pass on some of the costs to plug the $23 billion hole. And we saw bank stocks give up a little bit of their advance and then move higher once again.
Exactly. And when we're talking about this, also something that stood out to me, if you look at the VIX, it's a little above 19 right now. So when you're thinking about this, especially still being below 20, what that means as far as where is the volatility, right? When you're still seeing that happen. But as far as what the dynamic is with that, it's kind of still a head scratcher for some traders, right, Doug?
Yeah, most certainly. And one of the things I think is particularly interesting today, even though we've got this appetite for risk, we're not seeing a lot of movement in the bond market today. There has been so much volatility at the short end of the yield curve, but the 2-year right now is only up about a basis point. That, for me, is a little confusing. And I mentioned last hour that we are seeing a great deal of weakness in the yen. That's also a very interesting dynamic.
I want to stick on the bond market because it is amazing. It's beautiful to have the 2-year Treasury yield only up 1 basis point. I mean, a sort of return to normalcy, how this market is supposed to function after really just brutal couple of weeks.
Yeah, very much so.
No double-digit moves for the 2-year bond yield. Okay, let's take a look at where we're settling for the day. We're looking at almost 1% gain for the Dow Jones Industrial Average, up 319 points. The S&P gaining 1.4%, just off session highs. The NASDAQ, the star performer here, adding 1.8%. As Bob Dahl was just telling us, it's rare to see both banks and tech gain, but we have it today.
Also, looking more broadly at the breadth in the market, more than 90% of the stocks in the S&P 500 higher. And then if you're looking at the decliners, about 8% or only about 42 companies lower, Katie.
And if we take a look at the industry groups, I have a bunch of green bars behind me, a big broad rally today. You can see up top, it's semis, that sector group up about 2.8%. A lot of that coming from Micron. Remember, they reported results after the bell yesterday, gave that really strong outlook that boosted shares and the industry group as a whole. You go down the list, there's not much to pick at. It's all green, but at the bottom, it's been the loser all day, sort of these healthcare names. You have pharma there, you have healthcare equipment and services. Definitely the underperformer on this day, Jess.
Also, I have to point out some of the companies we were actually talking about after the closing bell yesterday, ladies. Looking at Lululemon, this surge almost up about 13%. It was its best day since March of 2019. So that does come off the back of that better than expected on the earnings front. And then I have to point out also what's going on with Paychex. That's up about 6%. One of the top gainers in the NASDAQ 100. And of course, also pointing out what's happening with Micron Technology. That's up about 7% as well. We talked about their earnings after the bell yesterday. If you're looking on the inventories front, still a lot of weakness on there. And we were debating what that would mean as far as what it could potentially mean for the stock gains today. But when you're looking at that, apparently not as bad as feared is what we've heard from a lot of this, and especially just broadly with chip makers, those still rallying, especially when you think of the gangbuster gains they have so far this quarter.
It's difficult to find a stock that is down on a day like today, but I did. I found
so
Ross Stores finishing off session lows. Looked like we're going to gap down about 0.7%. UBS today cutting Ross Stores to a sell, a new price target here of 77. It's at 102.47 right now. So that would imply something greater than a 20% decrease from where we were trading now. I think for the firm, UBS right now, they've become a little bearish, increasingly so on some of these soft line companies. Yesterday, we had that consumer sentiment figure, the consumer confidence number that I think shocked a lot of people. But now the conversation around recession, the inevitability of that, I think some people are second guessing the strength of the American consumer. Although Danny Blanchflower from over at Dartmouth talks about walkabout economics. Today, coming through Midtown Manhattan, you would not know that we're anywhere close to a recession.
But everyone was wearing Lululemon leggings, probably.
Probably. I didn't take a close look.
Let's take a trip to the bond market where boring is beautiful. You have the 2-year Treasury yield up just 1 basis point and then nothing along the rest of the curve. From 10 years to 30 years, not even a basis point of moves in either direction. And I mean, this comes after some pretty incredible repricing when it comes to the Fed's rate path. I will note that right now, if you look, you have still more than 50 basis points worth of cuts priced into this year alone. But Scarlett, that was 100 basis points of cuts sometime last week.
Yeah, BlackRock also saying that bet is wrong to count on interest rate cuts later this year. That's not going to be the playbook that the central banks use this time around. Looking ahead, Jess, I'm thinking of the data that's going to come out in the days to come. We get core PCE for the fourth quarter. That's a final read, and it's very backwards looking, but that might certainly contribute to the debate over where inflation is headed and how the Fed proceeds. And then on Friday, of course, we get core, PCE deflator for the month of February, which is much more current and what everyone's fixated on.
Well, Doug and I actually were just speaking with Bill Smead. So he's the CIO of Smead Capital Management. So we got into the inflation discussion with him as well. But something he also brought up is he's adding exposure to home builders like Lennar. If you look at the XHB, the ETF tracking home builders in the S&P 500, it's up about 10% this year. So you are seeing other corners, especially when you're bringing up data, Scarlett. We got the pending home sales data as well earlier today. You're seeing certain surprises to the upside there. But that's been an interesting dynamic as well as what's happening on the housing front too.
Yeah, the housing market continues to be interesting. And it's interesting, of course, that is one of the most interest rate sensitive corners of the economy. But I also want to talk about data that we don't normally talk about, but which is very much in focus in this cycle. Of course, we're talking about the Fed's balance sheet data, which I believe comes out tomorrow. And then we have the deposit data that comes out on Friday, that H8 release, when we're tracking the flow of deposits potentially from small to big. This is now top tier data, Doug.
Or money that is leaving the banking system entirely and going into kind of money market funds. I think the last figure was something greater than $285 billion, so more than $250 billion. That is significant, but the money supply, I think, is going to be very interesting to track. I think if you look at what's been happening to the balance sheet now, given some of the emergency lending facilities that the Fed has had to put in place, it's a little bit bloated. The question now is whether they can resume rolling off at the current pace, which I think is around $95 billion a month, or whether that has to be moderated.
It all gets folded into, what was the phrase that Jay Powell used, the totality of the data. Remember that? That was like 3 weeks ago.
It's beautiful.
Yeah.
I do think it's really interesting, though, Doug, to that point on the balance sheet getting bigger. I know that some people looked at that and said, look, QT, it's over. We're back to easing. But I think this is one of the situations where even though the number is going higher, intent really matters here. That's not necessarily a policy signal, as I've seen at least some people on Twitter make it out to be.
Well, it's going to be Fed funds, right? That's going to be the key going forward in terms of where the economy may wind up, and the degree to which, the other part of the story is the degree to which some of these banks will maybe contract a lot of the lending that they've been doing up until this point, and whether that's going to have a knock-on effect in really slowing the economy. So maybe, I think Powell even said it in his last press conference, that type of contraction, that level of contraction will essentially mean maybe another 25, 50 basis points worth of tightening.
Definitely. And I have to bring up the VIX once again. I was actually speaking with Chris Murphy over at Susquehanna, and he was talking about anytime we've seen its level, or even especially the VVIX down so much, when it's below 20, you do see traders come back in and buy some of those options. So I'm curious to see kind of now that we're below that threshold again, what that could potentially mean for tomorrow with the VIX.
Have we gotten a satisfactory answer yet, Katie, on why the VIX is so muted compared to the volatility measures for FX and bonds?
I feel like we haven't. I heard an interesting speculation by, it was Charlie McElligott of Nomura. He was on the Odd Lots podcast. This was from earlier in the month. He drew a direct line between basically what we're seeing in money market funds. So many people are in cash right now, and what we're seeing in the VIX. He made the point that basically being in cash is an at-the-money put. So maybe that's why you're not seeing volatility spike how you might expect it to, because people aren't necessarily in the market right now.
It's having a distorting effect.
Yeah.
So what would precipitate people to take risk then? Where would you, or what would be the event that triggers money moving from those money market funds into risk assets in the event
rate
that
cut.
they would rate cut? I think that's likely.
Yeah, but rate cut to get a rate cut, things have to get really bad. So path to
cuts
rate
both ways.
pretty ugly. Yeah.
The other thing that I want to point out before we wrap up here is the weakness that we're seeing in the Japanese yen. And I know an hour ago I made a bit of this because I think it's a significant move. The fiscal year for Japan ends on the 31st. So some corporate treasurers in Japan are unwinding hedges today. But I also think it's a reflection of maybe what we may be looking at in terms of a policy shift on the part of the Bank of Japan. We've got a new governor starting next month, and already the deputy governor making noise that the next action that they could take may surprise the market.
All right, guys, it's been fun. That does it for Beyond the Bell. It's been fun chatting with y'all. And so now our cross-platform coverage of Market Close on Bloomberg Television, radio, and YouTube is concluding. And a reminder that Bloomberg Business Week is now on Bloomberg Originals. We'll be back tomorrow at the same time, same place.
Sharing company. Our guest now is David Risher. He is the CEO of Lyft, and he is new to the job, from what I understand. David, pleasure to have you on the program. Thanks so much for joining us.
Oh, thank you, Doug. It's really great to be here.
So the challenges that you're facing right now as a ride-sharing company, when you're dealing with a rival like Uber that has such a large footprint. First, give me your view of the macro. How do you see things right now?
Look, the macro is we're number two. And here's what's interesting is even being number two is still a big deal, by which I mean, hundreds of millions of people, hundreds of thousands of drivers, billions of dollars earned over the last, 15 years. So it's a big category. This is $1 trillion plus category. But we're number two. And so we need to fight pretty hard, and we need to remind customers that we're going to pick you up on time, that we're going to charge you a price that's, in line with what you would get with the other guys. We're going to drop you off on time and really kind of focus on those basics to try to turbocharge our business again.
And I know you're officially taking over the chief executive role on April 17th, and you hinted yesterday to some of our colleagues on Bloomberg TV that the potential sale for Lyft, you were saying, was potentially off the table. So I want to know, what is the path moving forward? What is your outlook here as far as how to turn things around?
Yeah. I mean, to be clear, it wasn't so much that it's off the table. It's simply not our focus. Buyers come all the time and they, kick the tires and so forth. But from our perspective, the best thing we can do right now to maximize value for our shareholders is really build a great, great business. And it really does start with those basics. And if you compare our strategy to Uber's for a second, they've sort of gone this diversification route. It sort of made some sense within the pandemic when rideshare was so far down. But with rideshare coming back so strong, and it really is coming back strong, and I'm not making an earnings projection or any crazy thing like that, but simply to say that people are getting back out and kind of together again. So with that happening, you want to ask yourself a question: do you want to be focused on that opportunity or not? And we think being focused is great. We don't want tuna sandwich deliverers also picking people up. We think that might be an interesting business model, or at least an arranged marriage that worked well for a while. But it's not going to be how we go.
So you've got a strong background in technology. You were at Amazon for a while. You were also at Microsoft. You understand well the architecture of some of these platforms, these technology systems. Is there a way that Lyft innovates its way out of this situation right now to try to capture more market share? And let me just throw one thing out. Is it time to rethink dynamic pricing, just as one point?
I mean, that's a super interesting question. I won't go into the details on that, but for sure, there is enormous amount of innovation left. And I think it's such an important point, and it gets forgotten because we think that somehow we're on the tail end of this. We're at the beginning of the rideshare journey. And there's so many ideas here that our teams are coming up with on ways to really differentiate. I'll say if you talk to drivers, I mean, aside from saying they love the control over their earnings and love the control over their time, they'll also say they really like Lyft's platform as a driving platform. The mapping is easy. It tells you where to pick drivers or passengers up, where to drop them off, what side of the street, and so on and so on. these are kind of under the surface things, but there's a lot of innovation left in the market for sure.
So one of the things we've been talking a lot about, and I'm sure it's front of mind for you, the role of artificial intelligence in everything that we're doing these days. Is there a way to give the consumer right now in the ride-sharing space greater predictability in terms of hooking up with a ride so that maybe wait times are reduced? Are you thinking about ways to use the latest technology to service the customer, to service your client in a way that can maybe enhance the experience, but also lessen the wait time, as one example?
Absolutely. And I'm really glad you brought it up because I mean, imagine a world where you tell us a little bit about, the trip you're going to take, maybe that involves going to the airport and when you're going to come back. And we sort of arrange everything around that, right? We pick you up when we know you need to be picked up, and we don't, threaten to leave as soon as we're, arrived at the door. We drop you off at the airport, and then of course we know on the other side you're going to need a ride too. And you're going to need a ride to the hotel, and then you're going to do that whole thing in reverse, maybe in a couple of days. So, and that's basic, but even there, that just shows you how rideshare services can really make themselves a lot easier and frankly, more kind of compelling over time. And that'll be a big focus of ours.
And David, you did bring up Uber earlier, and so I was curious as far as, because with Uber and they have Uber Eats, it's typically more of a high margin business. You haven't, when it comes to Lyft, expanded into those types of segments. I'm curious if that's something you're thinking about, and if so, what those plans could potentially be.
Yeah, I mean, again, our focus right now really will be on the rideshare basics because we think there's so much to do there. But it's interesting. You have to be, cautious when you think about the grass always looks green on the other side. And so you think, maybe that food delivery is a high margin business, but then you peel the onion back a little bit and you start to see, Instagram, photos of, $72 deliveries for, a couple of slices. And you think, gosh, something's not really working super well there, particularly when the drivers are not saying, I love the experience of the food delivery. I double park, I get a ticket. Maybe I get a tip, but I don't really get very much in base pay. So compared to rideshare even. So I don't know. I think a lot of this is much more to be determined than it looks like right now. And I think when we look back in 5 years, we'll think, gosh, what an interesting early stage that those companies were in. And now look at how much more, just how much better they've gotten because they've really focused on us as passengers and drivers.
David, we're talking to you from here in New York City, where the yellow cab drivers, when Uber showed up into this marketplace, were really struggling. And I'm wondering whether or not a similar strategy may be adopted by your company when you talk about trying to grab more market share. Do you purposely undercut a competitor to try to capture more market? Is that part of a strategy too?
I don't think that's a very good strategy, to be honest, because that sounds like a race to the bottom, and that means somebody gets squeezed, and that ends up being the drivers, and that's not where you end up with a healthy market. I think it's better to think of it as, if you have 2 or 3 players in a market, you kind of want them all sort of fighting them out on kind of, best behavior. And I say that because, you really want, as a consumer and as a driver, you want some choice. And you don't want a knife fight that ends up with one guy in the end having a monopoly. I think that's very, very dangerous. We've sort of seen what that kind of looked like back in the old days with taxis, where maybe that wasn't the service that people really loved. And I don't think anyone really wants to go back to sort of a one-party system.
David, are we going to continue to see higher prices on the Lyft app?
I hope not.
Is inflation the main concern there as far as how to grapple with that?
I mean, look, there, of course, our costs, go up, just like everybody else's. But at the same time, we're very aware of the macro environment, and the macro environment is really trying to push the other way. In other words, consumers are saying, "Gosh, we don't have a lot of extra money right now." You were talking about this a little bit before, and it's a real question. How flush are consumers feeling versus how, more constrained are they economically? So we're trying to set ourselves up so that we can offer a great value. And not to the extent we can, not pass those sorts of cost increases along to customers.
David, very quickly here, I just need you to weigh in on autonomous driving in about 30 seconds. Too much hype here, or do you believe it's the future?
Too much hype now, but it's definitely the future. It's not happening tomorrow. It's a very complicated problem, and even optimists from 2 or 3 years ago are now being, having their own expectations reset about what's possible in the near term. But man, I mean, 5, 10 years from now, imagine, it's a karaoke experience if you're into that sort of thing. Yeah, I mean, there's so much fun you can have where the person in the front seat doesn't have to be driving, can be showing you around town.
Boy, I wonder if I'll live that long. David, thank you so much.
Me too.
Yeah,
I
right.
hope so.
David Risher, CEO, the new CEO for Lyft, joining us here on Bloomberg Business Week as we kind of get into hour 2 of the program here with positivity in the equity trade. We'll take a closer look coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all rallied today with a 1% gain for the Dow Jones Industrial Average, up 323 points. The S&P closed at session highs today with the S&P up 56, a gain there of 1.4%. NASDAQ up 210, a gain of 1.8%. A risk-on rally today lifted banks and tech. We had the 10-year 3.55% with the 2-year now at 4.09%. Spot Spot gold down $9 the ounce to $19.63, a drop there of 0.5%. West Texas Intermediate crude down 0.5%, $72.81 a barrel. The incoming CEO of Lyft, David Risher, tells Bloomberg his company, as compared to rival Uber, will remain committed to ride-sharing as opposed to food delivery and other businesses. He wrapped up a wide-ranging interview moments ago right here on Bloomberg Business Week.
They've sort of gone this diversification route. It sort of made some sense within the pandemic when rideshare was so far down. But with rideshare coming back so strong, and it really is coming back strong, and I'm not making an earnings projection or any crazy thing like that, but simply to say that like people are getting back out and kind of together again.
And today we had Lyft shares up 1.2%. Crosstown rival Uber, based in San Francisco, up by 2.7%. Again, recapping stocks higher today. Risk on rally with the S&P up 56, up 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Fly me to the moon. Let me play up there with those stars.
Oh, Blue Eyes. I think that was arranged by Quincy Jones. I just saw an amazing documentary on his life just the other day. And this song, interestingly enough, was associated with a lot of the Apollo missions. I think the astronauts probably took something similar to a cassette and played it back. Let's take a closer look now at this story where some college students are about to put a robot on the surface of the moon before NASA. Katrina Mason is with us. She is cyber and emerging tech reporter for Bloomberg, and her piece will be or is a part of the upcoming edition of Bloomberg Business Week. Katrina, thank you so much for joining us. Help me unpack this story right now. How do we get here with these students from Carnegie Mellon University?
How do we get here? I was in the room with a real-life moon rover, and I still don't know how this works. But essentially, more than 300 students for quite a few years now have been working on putting robot rovers on the moon. One of them is called Iris, and that is due to launch next month. There's another one called Moon Ranger, which is a bit bigger. They don't have a launch date yet, but it sounds like it could be going maybe in 2025 with NASA. That one is funded by NASA. But the little one, Iris, is the size of a shoebox, and they have made it that small so that they can hitch a ride on a lander. It's sort of all thanks to a lot of space going private. The rocket is private, the ticket for the lander is private. They've managed to keep project costs under $1 million, which is obviously a huge amount of money, but it's nothing like the amount that it usually costs to get into space. And they've tried to really miniaturize electronics, make this little shoebox of a robot really be able to withstand the environment up there in space and potentially on the moon as well.
Hey, Katrina, let's take a step back and tell us, how did this all come to be?
Well, there's a really interesting professor over at Carnegie Mellon University, which is where all these students are based, called Red Whitaker. And he told me that since he was 9, he's been trying to get to the moon. I think that's when Sputnik first went up in 1950. He's got quite a few decades worth of effort under his belt, and he's been doing a tremendous amount of work in robots. He's got robots to do navigation, to go underground, to clear up nuclear issues, and sort of beyond this world is really what he's focused on. And there's a huge number of students that consider him the driving force of this, but he's also quite hands-off in the sense that he's really letting his students pursue this. They had even posters up around universities saying there's never a second chance to be the first. And so these students have kind of signed up to be on a project that ended up working. It had lots of delays, it had big funding problems. They even resorted to crowdfunding at one point, and 900 names of students and others who contributed will be on a text file on this robot going to the moon. So it's been a huge effort over years. And NASA hasn't been focused on the moon. NASA has been looking at Mars.
Yes.
It's had 5 robots. It's not that they can't do this, but they've had 5 robots on Mars, and they are going to put one on the moon, they hope, but that's not till 2024, which means the students are likely to get there first.
So I would imagine that this represents an opportunity on so many fronts. Yes, there's the robotics component, which then may include the materials that are used to create the robots. And then when it comes to the cameras, too, what the capabilities of these cameras may be, not just to capture images, but maybe to measure radioactive wavelengths or something like that. So does this extend well beyond kind of the robotics department per se?
I think the feat that they're so proud of is that this can withstand wild temperature changes on the moon, that it's going to work, they hope, on a really, really small scale. But actually, the cameras are quite basic. There's one camera at the front and one camera at the back. And they make the point to me that they've done this with sort of off-the-shelf equipment. They've had to do it that way because they're trying to keep costs down and have things that students have access to. So actually, it's really hard having only one camera at the front to distinguish between shadows of, does this shadow mean it's a rock or does this shadow mean
so it's very basic in that front.
It's very sophisticated, but at the same time, it might have difficulty figuring out if it's about to go into a crater or over a rock, and if it gets stuck on either, that's kind of game over for this little robot.
So, Katrina, do you think NASA should hire some of these college students as far as how they've been able to figure some of this out a little bit quicker than they have?
One story where NASA had said to someone who already worked there, like, oh, go and work on this project and then come back. I mean, I think NASA is very, very supportive of this project conceptually. And there's another rover that the students are working on called Moon Ranger that NASA has in fact funded. So I'm sure that NASA is keeping strong tabs on these students.
It's like a science fair on steroids, I would say. But if you had to talk to me about the degree to which there's been maybe some interest expressed on the part of private capital, do we know a lot about that story?
This is the lander that is going up there is essentially a kind of FedEx for the moon. I mean, this is solving the problem of how you actually land. And I do think it's significant that this is the first robot that's going to be landing on the moon got there by private enterprise. I mean, this is what America loves doing. I think that the students feel that they're really proving a point that space can be, as they see it, for anyone. And obviously that throws up all kinds of issues of a scramble for the moon, a scramble for even mining on the moon. One of the things that the little iris is going to be doing when it takes pictures is trying to figure out what is in regolith. Regolith is essentially moon dust, and scientists think that there's water, ice on the moon now. Can you get hydrogen and oxygen out of that moon rock, and can you use that for air, water, and indeed for rocket fuel? So I think as soon as anyone manages to solve the rocket fuel issue, the sense of mining on the moon, the sense of where things can go next, certainly in the minds of these students, is that it's inevitable that rovers are going to show the way for where humans can potentially build bases and even habitats.
Katrina, you wrote also about how success isn't guaranteed. What are the hurdles here?
Well, they've got to make launch work. Launch is due to happen on May the 4th. I hesitate to say that May the 4th be with you joke, but I think that's all very uppermost in those students' minds. It's got to go through really extreme temperatures, electromagnetic fields. It's got to nail the landing. So even getting to the moon is a 1 month process if that goes well. And then it has 72 hours of battery life if it doesn't move. I don't think they quite know the impact that it'll have if it does move, which is obviously what they want to happen. It might to about 50 hours, but they've got to control that from mission control down on Earth, and there's a 10-minute delay in data transfer. So they may be telling it to avoid a crater whilst it's already in a crater. If it turns upside down like a woodlouse, I'm not sure that rover has a way of turning back around the right way.
Last question. I don't know if you have a sense of how this is being viewed outside of the United States. Students from Carnegie Mellon University, I'm thinking of maybe the China perspective, where you have students that are equally talented, well-trained in physics, in the kind of engineering fields that would be required. Do you think this is being viewed on a global basis where other students are going to want to compete for the same type of goal?
Well, what I think is so interesting is China is ahead. China has a rover on the moon right now. So I think what's interesting is that it's students in the US that are catching up to the efforts of, the entire Chinese state. And of course, China has a big focus on education, on integrating the civil and the military. So China's already there, and other countries are trying to do it too. UAE, UK, Greece, but a number of others are looking at it. But it really is extraordinary that it's students in the US that are actually doing it from the American side.
Katrina, thank you so much for being with us. Great piece that you can read in the upcoming issue of Bloomberg Business Week. College students are about to put a robot on the moon before NASA. Katrina Mason joining us. She is our cyber and emerging tech reporter.
How amazing is that, Doug?
Unbelievable, you know, and these are very, very young, obviously gifted, talented students that are, I mean, this has probably been, for many of them, a lifelong, in their young lives, a lifelong ambition.
Absolutely, and a lot to your point where you're talking about a science fair on steroids. That's exactly what it is.
Yeah. We'll continue with the program, and we'll get to some of the other stories that we're looking at today, including what's going on with Trex, a company that is dealing with the challenging environment of new innovation in building materials. First, let's get caught up on global news as we head to the 99.1 newsroom in Washington, D.C., and Nancy Lyons. Hey, Nancy.
Thanks, Doug. Lawmakers on the House Foreign Affairs Committee today asked the Inspectors General of the State and Defense Departments, as well as USAID agency, for assurances that the money Congress has appropriated for Ukraine is being well spent. Bloomberg's Irv Chapman has more from Washington.
Joined by her colleagues, Nicole Angarella of the aid agency said there are layers of supervision to ensure that the economic aid is not diverted to private pockets.
The U.S. government's direct budget support is going through the World Bank. Once expenditures are made and they are determined to be eligible by the government of Ukraine, the World Bank reviews those expenditures. On top of that, USAID is doing its own oversight and monitoring.
Angarella said the agency contracted with the accounting firm Deloitte to ensure that the Ukrainian Ministry of Finance is organized to vet the expenditures before submitting them. In Washington, Irv Chapman, Bloomberg Radio.
Russia says it will no longer give the U.S. advance notice about its missile tests, as envisioned under a nuclear pact that the Kremlin has now suspended. A senior Moscow diplomat spoke on the topic today after its military rolled missile launchers across Siberia in a show of the country's massive nuclear capability while it continues to fight in Ukraine. The White House says the upcoming transit through the U.S. by Taiwan's President Tsai is consistent with its one China policy. White House National Security spokesman John Kirby.
What we hope to see here is a normal, uneventful transit by President Tsai Ing-wen. Because that's what's happened before, and there's no reason for it to be any different this time.
Kirby would not predict how China would respond to President Tsai's visit. She departed Taiwan earlier today and will spend 10 days in the U.S., during which she has stopovers in New York and Los Angeles. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check markets all day long here at Bloomberg. I'm Charlie Pellet. Developing story headline from the Bloomberg Professional Service. Electronic Arts restructuring some of its teams, impacting about 6% of its workforce. After hours, the shares of Electronic Arts, they're up now by 1.7%. Earnings news after the bell. We heard from RH, the old Restoration Hardware. It forecasts net revenue for the first quarter, and that guidance missed the average analyst estimate. After hours, RH down now by roughly 4%. Stocks higher today. Risk appetite continued to recover from turmoil in the banking sector, led by gains in technology and financial shares. S&P up 56, a gain of 1.4%. The Dow up 323, up 1%. NASDAQ up 210, up by 1.8%. 10-year yield 3.56%, with the 2-year 4.09%. Spot gold down $10 the ounce to $19.63, a drop there of 0.5%. West Texas Intermediate crude down 0.6%, $72.79 a barrel. So it was an update on Wall Street today. Bill Smead, Chief Investment Officer at Smead Capital Management, was our guest right here on Bloomberg Business Week, and he cautioned against investor exuberance.
There's not very much upside in a bear market rally from here, because you had one heck of a great bear market rally. The things that went down the most have gone up the most, but they're up to way below where they started. That's what bear market rallies do. They're trying to suck people into believing that you can get the old game going again.
And again, recapping stocks higher today, with the S&P up 56, up 1.4%. S&P at 4,027, 10-year yield 3.56%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, we are back here on Bloomberg Business Week. You know, I think we talk a lot these days about taking care of the planet, the environment. What does that look like when it comes to building products? Well, Trex is a company, a leading producer of outdoor decking and railing that has a sustainable model. And the company's CEO, Brian Fairbanks, joins us now in the Bloomberg Interactive Broker Studio in New York. Thank you so much for being with us.
Great to be here, thanks.
Give me a history of this company. How did it come into being?
Yeah, what's really unique about Trex is our sustainability journey started over 30 years ago when our founders looked for ways to use, at that time it was excess bread bags and waste wood, and understanding how could that material be used in a way that could generate value for the company. And they landed on a product that ended up being our first generation deck board. And to this day, we still use many of those same principles. We mix the polyethylene plastic and wood together with a number of other additives to turn out a world-class deck board.
And you've been at the company for close to 2 decades now.
Right, started back in...
The process of making this composite, you mentioned it involves polymers, synthetic polymers and wood. They're combined. I would imagine that there is a bit of mulching when it comes to the wood. Things are heated and compressed. Is that pretty much how it works?
Yeah, simplistically, we're taking the wood, the plastic, mixing it together, adding heat to it, adding some additives to make sure that we're going to have the longevity. We have an up to a 50-year durability warranty on our products. Through that, it goes through an extrusion process. We cool it, we cut it, and then it gets packaged.
And how exactly, because you were talking to us about wood decks versus going into composite decks, tell us a difference about how that works.
Yeah, so the great part about Trex composite decks is going to be the reduced maintenance and, of course, the lifespan. Today, pressure-treated lumber is not particularly high quality, so your deck that you build, you could last 10 years, maybe 15 years, depending upon the environment. But also, every year in the spring, you're going to be spending time cleaning, sanding, staining the deck, and nobody wants to spend their valuable time on their outdoor living area doing those sort of things.
Bloomberg Intelligence, our in-house team of analysts and researchers, was pointing out that growth in composite decking has slowed lately relative to the growth that we saw last year. When you look at the market right now, whether it's adoption for the home kind of fixer-upper that goes to a store like a Lowe's or a Home Depot, or it's the professional contractor that's looking for materials to use in a lot of the renovation projects, where is your focus right now? How do you want to grow?
We continue to see good activity both from the DIY channel as well as our pro channel. And speaking with our contractors, their backlogs moving into the season are all at reasonable levels. They're not elevated like they were the past couple of years, or they could have been out 12 or 16 weeks, but they're more normalized where they're 4 to 6 weeks out. That's healthy for the marketplace. And we're still seeing health, especially at the high end of the market, and most of our customers do tend towards the higher end.
And thinking about decks, especially in the pandemic, right, where people wanted to build more of them, but then we saw this surge in lumber prices, and so that was hectic for a lot of people and obviously very pricey, and then those prices came back down on the lumber side. But I was curious your thoughts on, with your business, how it's doing and what the tell is about the economy right now.
Yeah, one of the keys when we started really going after the wood conversion opportunity was launching a product that was 2 times the price of wood, also with a trade-up opportunity to a product that has a little bit better aesthetics for about 3 times the price of wood. And with that product, we saw the opportunity to be able to bring more people into the marketplace. It's something that we've really been driving since 2019, and we have a long runway with that.
When it comes to the aesthetic, is that something that you have to overcome the resistance to a product that may not look like natural wood or some type of wood product? Is that been a kind of a point of resistance?
The vast majority of the market loves the look of composites, and every time we come out with a new product, there's more and more realism with wood. Beginning of this year, we launched our signature product. We launched it on a regional basis, and this product has all of the performance characteristics everybody has come to expect with Trex, but has that real look of hardwood. If you were to take a piece of Ipe, which is a Brazilian hardwood from endangered rainforests, and put a piece of Trex signature next to it, you'd have a hard time telling the difference.
Wow.
So there is a market that's clearly looking for that aesthetic.
Something I was curious about as far as the housing component of this, is it more people are building new decks for existing homes that they're already in, or as far as comparing that to, say, new home builds, and that's something that they're looking for?
The vast majority of our market is repair and remodel, 90 to 95%. So the new home build side of things obviously is a key indicator from an overall economic perspective, but the primary driver for our business is that repair and remodel sector.
Manufactured here in the U.S., right? How are you doing that?
All of our product is manufactured in Virginia and Nevada. We also have a third site that will be coming up probably in the 25-26 timeframe down in Little Rock, Arkansas. We've always been a U.S.-based company. We can be very efficient in our manufacturing production here. And we also have very unique ways of using the recycled material. It's not something that every organization can do. We have built a culture which accepts a highly variable raw material stream and then converting it to a high value end use in our deck board and railing.
Any thoughts about going offshore?
No, not really. From a manufacturing perspective, everything's done here in the U.S. Now, longer term, there's a great opportunity in international marketplaces. Today, we sell in over 40 countries, but the vast majority of those overseas sales are done into mainland in Europe as well as Australia. We look for countries that have a higher GDP and an interest in outdoor living, and we're really just in the first inning of that opportunity. Eventually, when I'm back here in a good number of years, we'll be talking about international expansion.
So when it comes to sourcing raw materials, let's talk the synthetic polymers, whether they're used plastic jugs, things that are being pulled out of the ocean by the bucket load. I mean, is there a network that you're tapped into right now, whether it's with some of the trash hauling companies, whether it's with local municipalities that have been involved in these recycling programs that maybe up until this point had been exporting a lot of that to China for some kind of recapture? How are you tapped into the network for, let's say, the synthetic polymer?
Our sourcing generators, so we'll have a contract with the parent organization and buy material out of their distribution centers or their manufacturing centers. For example, manufacturing materials that have protective films that are included on it. They'll pull that film off, throw it into a baler. Once they get 40,000 pounds, we'll go ahead and we'll pick that up. And we do that all across the country.
It's very good to talk to you. Thank you so much for being with us. That's Brian Fairbanks, the CEO of Trex, joining us here on Bloomberg Business Week. We've got a lot more ahead. This is Bloomberg.
Join.
This is Bloomberg. Now, your company news headlines on Bloomberg Radio.
It is 4:53 on Wall Street. From Bloomberg World Headquarters, I'm Charlie Pellet. The incoming CEO of Lyft, David Risher, tells Bloomberg Radio his company will remain committed to ride sharing with a focus on fares as opposed to Uber's food delivery and other businesses. And in a wide-ranging interview right here on Bloomberg Business Week, he also talked about the potential use of artificial intelligence.
There's so many ideas here that our teams are coming up with on ways to really differentiate. I'll say if you talk to drivers, I mean, aside from saying they love the control over their earnings and love the control over their time, they'll also say they really like Lyft's platform as a driving platform. The mapping is easy. It tells you where to pick drivers or passengers up, where to drop them off, what side of the street, and so on and so on. These are kind of under the surface things, but there's a lot of innovation left in the market for sure.
And today, Lyft shares did gain by 1.2%. Crosstown San Francisco rival Uber up by 2.7%. Macy's CEO Jeff Jenrette is retiring in February after nearly 7 years of navigating a difficult department store landscape, ceding the position to Bloomingdale's CEO Tony Spring. Macy's shares up today by 0.2%. Blue Bird Bio shares fell the most in 9 months after the struggling biotech said it will fall short of its goal to seek regulatory approval for its sickle cell gene therapy by the end of March. Today, Bluebird was down 24%. Those are some of our company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
We're back in action on the Wednesday edition of the radio program. Carol and Tim off today. I'm Doug Krisner in New York along with Jess Menton. It's 4:55 on Wall Street. Good time to check in on the latest world and national news.